Good evening. I'm Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for Monday, the 7th of August, 2023. All right, so we're in more earnings. 34 companies will report this week. So far, it's been a beat. However, the market's been falling within 48 hours after the numbers come out on most of the companies. So it's something to be watching. I was reading FactSet on it, and it's an interesting statistic going back, I think, to 2011 or so. So it was fairly important as I see it. We get Disney reporting this week, so we'll want to see what they do. And of course, you've got your NVIDIAs and all these others coming out. Tesla had a piece of bad news, and the CFO, who some thought was being groomed to take over from Mr. Musk to run the day-to-day, he announced his retirement, and that was an interesting piece of information. We're still seeing bonds and notes getting hit and interest rates basically steady to higher, and that is weighing on the market because you got to ask yourself, gee, what am I trying to make in the stock market? Where are the price earnings? And I can get X amount on a 2 or a 5 year note, and you go, whoa, that's an awful lot of money. And that's just what's going on. So you're seeing all the pitches. I keep getting them in the mail from banks. Hey, give me X amount, and we'll give you near 6% return on your money for 12 months, whatever. I get it. It's enticing. Intel. We'll finish up. Write me. What would you like me to start covering tomorrow? I'll look tomorrow morning to see what you've put in. And if I like what I see, remember, it's got to match. It's got to have volume. That's very important. Outstanding shares, very important. And people want to see something about it, okay? Not interested. I get so many of these weird companies that nobody's ever heard of, but somebody follows and they want me to cover it here. Not going to do it. It's got to be broader based, okay? You filled the gap, came down, and you're just hanging right in there. I think you'd agree. The market is bullish, higher lows, higher highs on Intel. Until the market takes out this 34.13, still looking in pretty good shape. The market's staying above so far the 18-week average of closes. Should it be able to clear Friday's high? And I'm saying Friday at 35.56. That could give you a lift in the market back up. Maybe you make it to the Bollinger Band top, 36.37, because you've already seen a market that's corrected an overbought condition. It's sort of skirting now sideways in the momentum. In Rivian, we'll see what goes on here. Lucid reported, and Lucid lost a bit more money than the street was looking for. They lost about 40 cents a share, but their revenue went up to like 156 million for the quarter from 90 some odd million the prior quarter. That's what the street wants. And they kept that they're going to deliver the amount of cars that they said. The guidance didn't change. This is good news. They have enough money with the Saudi money that was just put in to make it into 2025, but their burn rate is still very important. Rivian, slipping back to the lower Bollinger Band, coming back down here. I'm seeing more and more of these on the streets of Chicago. I saw really a cool pickup. I don't know if it was a pickup. I thought it was an SUV, but maybe I'm wrong. Looked like it. In UGA, you have fallen back here into the 18-day average of closes for all purposes. You're coming to the end of the driving season. You've lost the embedded reading that often leads, present tense and future, to a challenge of the 18-day average, which has taken place, basically. And the market's looking to see what its legs are going to be. Any close under 69.15 would be considered bearish. That would also be under the 18-day average of closing under the prior low. In XLF, the financial services, you've corrected an overbought condition, went down to just the 18-day average and have held it. So it's kept the bias up, the trend down, a correction's taken place. What is the next move? The chart's not telling us, at least not giving me an idea. In the industrial sector, we've still got the malaise here. You came up for a rally that I couldn't figure out. It gave back very quickly everything from it. I mean, you worked really hard for this rally, and within 72 hours, you gave everything back. You're getting a bounce from an oversold condition as you hit the lower Bollinger Band. How often do I tell you, pay attention to those Bollinger Bands? The first hit up or down is often an area you want to take some money off the table. NVIDIA. I think if you can get over Friday's close of 456.42 on a closing basis, you got a shot then to get back up and challenge the upper Bollinger Band. On the other hand, if the market gets up here intraday and then starts falling back, maybe it's telling us a story that it's worn itself out. That could be there too. I see that on a chart like that. Coinbase right on into the toilet, coming down here. PayPal's issuing a new stable coin, and that didn't help Coinbase at all. Negative news out of that sector. In the home builders, you're doing one of these. You're just waving your hand as the Bollinger Bands have tightened and volatilities come out of the market. Eventually, this leads to something more important. But right now, that's spinning around, no trend, higher high, lower low. I don't see a friendly part there. You still have in the energy sector bullishness. You've got the higher lows, higher highs. You've got the Saudis saying that if prices don't advance from here, they're prepared to do even more cuts. Then we have to take a look what the attack by Ukraine on a Russian oil taker. What does that do for world oil prices? All this comes together and it gets interesting. The metals, to me, the problem is high interest rates. Why buy metals when you've got the high rates? And for the metals you use in industry, we've been slowing down, and that's been all the central bank's goals. I'm not saying they want to push the economies over to a recession, but none of these charts are bullish. They're all got problems right here. Copper market slipping back a little bit. We'll see if the market can clear here 40.45 to get bullish again, or if the bears want to defend 40.12, not let it get over there and try to push it down into the 38.66 level. This is an important zone right here. It's going to start giving us a bigger picture. I've been bearish all the way through, as you know, on TLT, BND, but I told you don't sell under a Bollinger Band. The market did just as I teach. Got to the right-hand side of it, and now coming down again. I don't know where the bottom is, but this is still a bearish chart. In the dollar index, the market is trying to consolidate gains over the 200-day average in a market that is trying to embed. Now, both numbers were over 80 today. Were they over 80 yesterday? They were. Were they the day before? They were. So you have your embedded reading. And that means that on these pullbacks, the trade is buying. I'm not the keenest guy in wanting to buy the first move over 200-day average that each time it's gotten there in the past, it's failed. But until the embedded reading is lost, I don't know what else to say. I can hold back, but if you do anything and you want to be in, I think the bull side's still the way until you lose that reading. And if that's bullish, you're bearish in FXE, but it's just oversold, not embedding. That's what's keeping me nervous on UUP. You put it together, you try to come up with a game plan, and I have one for you. It's really simple. I want you to look at the stock indices. I created a special report that I mentioned over the weekend, and that report deals with the seasonality from August 4th, the day I shot it, right into the Christmas time frame. What typically takes place? Is September or August a weak month? I go through it and I show you the statistics to prove the point. Then I show you what history typically does as you come out of September. I walk you through all that. I show you how the 20, 26, and 27-year average for the longer term, the 15 for the medium term, what the markets have done, and then the 5-year averages. So give you really a good picture here. How do you get it? Just move your cursor to the top up here. That's all you have to do. And when you move it there, you'll see a cursor. Give it a click. It'll take you to our website. If you go to the website, it's irapstein.com. Under the word research, you'll see it listed. It's only on for 3 days, so it's going to come off tomorrow. Not tomorrow, Wednesday. I did it intentionally on Friday because it doesn't count the weekend, but be careful. It can either come off Tuesday night or Wednesday. I don't know which one myself. It'll be one of the two. We only put markets up, these reports, for 3 days. They're not meant to be a history lesson. You have a good day.